Hey everybody, and welcome back to Sip and Talk.
Great to be here.
We've unpacked quite a stack of sources for you this time, digging into some really compelling things happening, things shaping the world right now.
That's right. We're covering everything from, global trade winds shifting to what some major tech players are up to and, well, an update on something we all hoped was behind us.
Yeah, so we'll look at the latest on trade tariffs, those global negotiations, see how markets are reacting.
Right, and asset performance too, plus some fascinating insights into Elon Musk's ventures, what he's been doing lately at SpaceX and Tesla.
And the big changes AI is bringing to search, how we find information.
And finally, that sobering look at COVID-19 cases reappearing in some parts of the world.
So our mission here is to go through these sources together, pull out the really key nuggets for you, the facts, the insights, so you can quickly grasp what's happening and, importantly, how it all connects. Ready?
Let's unpack this.
Okay, so kicking things off with trade tariffs. One of the first things the sources highlight is a potential pivot. It looks like the main target might be shifting.
Yeah, it seems like it. For a while, obviously, all eyes were on China. But now the sources suggest the focus is swinging maybe more towards the European Union.
And what's really interesting is how the markets react, isn't it? So sensitive.
Oh, incredibly. Just last Friday, for instance, the major U.S. indices dipped. And Apple stock specifically, it dropped about 3%.
Wow. And the sources link that directly to
talk from Trump about potentially bringing in more tariffs, and specifically mentioning Apple as a possible target.
Right. And the EU negotiations themselves, they've been a bit up and down, according to the sources.
Yeah, kind of a roller coaster. There was initial pressure, talk of slow progress. Reports even said a meeting ended early. And a hard June 7th deadline was set.
Okay, but then?
But then a shift. Sources report a good talk apparently happened between Trump and the EU Commission President von der Leyen.
And that changed things.
It seems so. Led to the deadline getting pushed back to July. And crucially, that kept the 90-day tariff exemption period going.
And the market reaction?
Immediate. U.S. stock futures rallied pretty quickly right after that news came out. Shows you how closely watched this is.
So let's talk scale. Why is this U.S.-EU trade relationship such a big deal?
Well, it's massive, just huge numbers. The sources say U.S. imports from the EU are sitting around $606 billion.
Okay, and exports?
Significantly lower, about $370 billion. So that creates quite a large trade deficit.
Which is something Trump has flagged, wanting to reduce it to boost U.S. manufacturing, right?
Exactly. But here's a really sharp insight from the sources. U.S.-EU trade isn't just big in dollar terms relative to the U.S. economy.
Is it bigger than China?
It actually is.
Yeah.
U.S.-EU trade is about 4.9% of U.S. GDP in 2024, the sources estimate. Compare that to U.S.-China trade, roughly 2.2%.
So the potential ripple effect
is significantly higher, according to these analyses. The economic interconnection is deeper, you could say.
Okay, so if tariffs do happen, who feels the most pain, according to these sources?
Well, the EU is right at the top, understandably. Then Mexico and Canada follow. After that, China.
And then others like Japan, South Korea.
Exactly. Japan, South Korea, Taiwan, Vietnam are also mentioned in that sequence.
Let's dig into those EU imports a bit more. You mentioned commodities.
Right, about $127 billion worth in 2024. And a very large slice of that category, the sources highlight, is pharmaceuticals.
That creates a bit of a contradiction, doesn't it? Trump wants lower drug prices.
But tariffs on drugs coming from major European manufacturers could actually push prices up if those costs get passed on. It's a real tension point.
And it's not a one-way street either, right? Europe relies on the U.S. too.
Increasingly so, yeah. Sources note Europe's economy has become more reliant on the U.S. over the past decade. Looking
at specific industries within Europe, how might they handle tariffs? Pharma versus, say, autos.
The sources suggest pharma might have more wiggle room, patents, market share. They can probably pass on costs more easily.
Makes sense.
But the auto industry, that looks tougher. Much more intense global competition, so absorbing or passing on tariffs is harder. More pressure there.
Okay, what about other negotiations mentioned? Japan?
Yeah, they're apparently in the third round. But sources say they've hit a bit of a snag, specifically around cars, auto manufacturing.
What's the issue?
Japan's reportedly pushing for better tax rates for investing in the U.S., but the U.S. isn't offering particularly high rates. So Japan's kind of in an awkward spot compared to, say, South Korea or Taiwan or the EU potentially.
Any movement at all?
Well, there's one detail mentioned, the U.S. steel takeover by Nippon Steel. Sources suggest that might be tied to broader investment and security concessions. A slight easing, maybe?
And South Korea? Sounds less smooth.
Yeah, it appears that way. Sources point to a leading candidate, Lee Jae-myung, who apparently wants to delay talks past the July 8th deadline, wants to prioritize South Korean interests first.
And he's seen as.
The sources describe him as more left-leaning, potentially a tougher negotiator. There's also a report about a significant U.S. troop reduction around election time. Could be pressure, could just be routine rotation. Hard to say.
Then there's Taiwan. Interestingly, the sources note there's not much international media coverage on those talks.
Right. Which could mean a few things. Maybe it's just early days. Or the U.S. is deliberately keeping things quiet.
Or maybe talks are going really well.
That's the optimistic take. And Taiwan's economic minister is quoted sounding very positive, excellent progress, ahead of schedule, fruitful.
What are the U.S. demands there, according to the sources?
Pretty clear, apparently. Money, fixing imbalances, and worries about industry hollowing out.
And potential tariff rates across the board for these partners.
Sources speculate maybe in the 10-25% range. Likely not higher than China's 30%, but probably not lower than the UK's 10%. The Japan outcome might sort of set the benchmark for South Korea and Taiwan.
And all this back and forth fuels market worries, especially about big names.
Definitely. There's concern noted about potential 25% tariffs hitting companies like Apple and Samsung.
Which brings us to supply chains. The goal isn't just moving out of China, is it?
No, the sources are quite clear. Trump's stated goal is bringing supply chains back to the U.S., not just shifting to, say, India, which sources add might also face tariffs, maybe 25%.
But relocating back to the U.S. is expensive, right?
Potentially doubles the cost, sources estimate. Even with tariffs, overseas production often stays cheaper. And look at Apple, still 85% assembly in China, 115 suppliers there.
Shifting that in 90 days seems impossible.
Incredibly difficult, yeah. The sources emphasize that. So one strategy companies use is moving semi-finished goods somewhere else, like Vietnam, for final assembly. Slap a Made in Vietnam label on it.
Like transshipment.
Exactly. But sources say the U.S. is actively pushing Southeast Asian countries to prevent that. So ultimately, it seems direct taxes on brands exporting to the U.S. are likely.
Which probably means price increases for us on things like iPhones.
That seems the most probable outcome, according to these reports.
Okay, so this trade uncertainty obviously feeds market reactions. We saw the dip, Apple's drop.
And then the quick rebound when that EU deadline got extended really shows the connection.
Looking more broadly, how have assets been performing? European stocks, for instance.
Actually doing quite well, sources note. Could be partly boosted by money moving out of the U.S. dollar, which makes the euro appreciate.
And gold, the traditional safe haven.
Saw a significant jump, climbed close to 5% just last week. Classic safe haven move amidst uncertainty. But the sources offer an interesting angle on this recent market bounce generally.
Yeah, not just pure optimism.
Maybe less about that and more driven by these specific policy shifts, like the deadline extension plus the U.S. dollar weakening, which makes other currencies look better.
So the overall mood is still pretty cautious then.
Seems that way.
Yeah.
Sources mentioned a J.P. Morgan poll. Only 17% of U.S. stock investors call themselves continuously bullish.
Wow, that's low. Where's the money going instead?
Well, that poll shows significant chunks moving into European markets, 36%, also gold, 23%, and even Bitcoin at 17%.
So the preference order is Europe, gold, Bitcoin, then U.S. stocks.
According to that particular poll, yes. Although U.S. stocks are still more favored than bonds, bonds have seen heavy sell-offs, sources note.
Okay, let's shift gears.
Yeah.
Elon Musk. What are the sources saying about him?
Well, the big news reported is he's back to being super hands-on. Full-time, intense focus on SpaceX and Tesla again.
Like sleeping in meeting rooms, kind of intense?
Exactly. Sleeping in meeting rooms, server rooms, factories. Sources generally frame this as a positive sign, potentially boosting efficiency.
Which contrasts with some past criticism about his focus maybe being elsewhere.
Right, like on those government efficiency projects. Oh, and a minor point, the sources mentioned, he's apparently posting less on X currently.
But the main takeaway is this return is seen as good for operations.
Yes, a potential boost for driving things forward. And speaking of operations, SpaceX, especially Starlink, the growth is just wow.
Remember the numbers.
As of May 2025, 8,417 Starlink satellites launched. To put that in perspective, sources say that's about 39% of all Soviet launches ever combined. And maybe 2/3 of all active low Earth orbit satellites globally right now.
That's incredible market share.
It is. And sources point out that since U.S. deregulation back in 2020, SpaceX has built what looks like a near monopoly in the commercial launch market for low Earth orbit.
And Starlink itself must be becoming a cash cow.
Looks like it. Sources estimate it could hit around $2 billion in free cash flow for 2025, entering a significant operational phase, they call it.
And future potential, too. 6G, 7G.
Yeah, sources suggest that down the line, traditional telecom operators might actually need to buy bandwidth from Starlink for those upcoming technologies.
Musk's management style always gets attention. What do the sources highlight there?
Well, that intense focus on resource allocation, cost control. They mentioned his subtraction philosophy. Reusable rockets at SpaceX is a prime one, but also X, formerly Twitter.
Right, the massive headcount reduction.
Exactly, from 8,000 down to 1,500 employees. Revenue reportedly fell, like 46%. But sources indicate profits surged 80%, a record high for the company. And the profit margin went up by, get this, 333%.
Wow. So highly effective, if brutal.
The sources definitely framed that lean management style as remarkably effective, at least in those cases.
Okay, connecting this innovation back to the bigger picture. Technology productivity cycles driving asset values.
That's a major theme in the sources, yeah. A key long-term driver.
And within the big tech players, the Magnificent Seven, who's been standing out recently.
Sources note NVIDIA and Meta have shown really impressive stock gains lately. Apple, Alphabet, Amazon. Their performance has been relatively weaker compared to Tesla, NVIDIA, and Meta in this recent period.
And a big tech trend impacting companies like Google. AI changing search.
Absolutely. More U.S. users are apparently relying on AI for those deep summaries, that direct answers. Leads to what they call zero-click search.
Meaning people aren't clicking through to websites as much?
Exactly. There's a survey cited from late 2024. It found 80% of people don't click links in at least 40% of their searches. They just take the AI answer.
80% don't click 40% of the time.
And even more striking, 30% of users apparently don't click external websites in 80% of their searches, just rely on the AI summary.
That has huge implications for websites relying on search traffic.
Massive questions being raised about that model, yeah.
Okay, finally, let's touch on something the sources indicate is reappearing, COVID-19.
That's right. Reports from recent weeks showcase spikes happening in parts of Asia, the Thailand, Singapore, Hong Kong particularly mentioned.
Tens of thousands of cases. And some deaths.
Yes, unfortunately. India has also seen a moderate rise, around 257 active cases reported nationally, with some deaths in states like Maharashtra noted.
Any specific data points that stand out?
Well, Hong Kong's infection rate reportedly jumped quite dramatically in 1 week, ending May 3rd, from 1.7% up to 11.4%. They had 81 severe cases and 31 deaths that week, highest weekly death toll in a year, sources say.
And Thailand, Singapore.
Thailand's weekly cases more than doubled to over 33,000 nationally. Singapore is seeing its first major peak in about a year, over 14,000 cases reported in the week ending May 3rd. A definite uptick.
What are the reasons cited in the sources?
Mainly waning immunity in the population. Fewer people getting boosters, And that leaves high-risk groups like the elderly or unvaccinated kids more vulnerable.
But is it a dangerous new variant causing this?
That's the key question. And experts quoted in the sources say no. There isn't a dangerous new variant circulating that they have identified.
So what is causing it?
It's descendants of the JN.1.1 variant. That's the one that emerged back in August 2023, had about 30 mutations. These current versions aren't showing signs of being more severe or more contagious than what we've seen before.
So the expert take is?
Kind of. Worth watching, but no panic. That's the sentiment conveyed in the sources. But there's another challenge highlighted, isn't there? Public fatigue.
Yeah, that's a really interesting point the sources raise. Public fatigue with all the guidance, maybe a loss of trust over the years.
Right. And the concern is this might mean people are less likely to follow new advice or get new vaccines if needed. They might just ignore the virus, even if it did become more lethal again.
That's a sobering thought about public health dynamics. Wow, okay. We have certainly covered a huge amount of ground from, global trade and market reactions.
Space tech, AI's impact, and then this health update on COVID.
What we really tried to do here is pull out those key insights from this stack of sources, show you how these different areas, seemingly separate, are actually interconnected.
Yeah, how they all shape the landscape, the economic, tech, social landscape you navigate every day.
Exactly. So as we wrap up this deep dive, maybe here's a final thought for you to mull over. How will this combination of forces, the push for economic rebalancing through tariffs, the shifting flow of global capital, the disruptive tech innovation like AI and Starlink, plus these evolving public health dynamics, how will all that together reshape things?
Things like the supply chains you depend on, the way you access information.
Maybe even the price of the products you buy in the coming months. Something to think about. Thanks so much for joining us for this deep dive into the sources.
And hey, if you enjoyed this deep dive, please subscribe to Sip and Talk. Oh, and speaking of things to check out, go find our old friend Micky's YouTube channel. Seriously, that guy is hilarious. You know Micky, always up to something.
Oh yeah, Micky, good times. Definitely check him out.